Anna Olick is here on set with us and has brought two special guests along.
I have, as well as the news, Kelly, which is that CBRE purchased Industrious, which was a major player in the flexible office space. And that's why I'm thrilled to have CEO Jamie Hodari of Industrious, as well as Brendan Wallace of Fifth Wall, which helped facilitate the deal. But Jamie, let's start with you. What does CBRE's investment say about the state of office right now and the recovery? We're still at a record high vacancy rate.
I think what it's saying is people talk a lot about space and vacancy percent and things like that, and this is actually about experience. That you look at the buildings people want to be in, and they don't have 1 square inch of vacancy. And so the name of the game moving forward is how are you running that building? What are the operations? What's the experience in that space to make it a place people want to come to 3, 4, 5 days a week? And CBRE is reorienting the company around they're the largest operator of buildings in the world.
But we think about flex space and we think of WeWork, which failed pretty spectacularly. What makes Industrious make it better, and why did CBRE see that potential?
So Industrious had 2 things that made it different. One was we do management agreements. So it is a more sustainable, safer kind of business than competitors that did long-term leases. But also, it is an outsourcing business. Industrious has spent 12 years saying, you're a big bank, you're a big tech company, let us create and run your 150-person teams and below for you, and I promise you, you will have just as good, if not better, of an employee outcome than when you do it yourself. We are really the only provider in the space doing that, and that's a capability that I think the whole world wants right now.
Just so I understand real quickly, so you're saying, but you're a flex workspace? So what is it, like for 150 seats, what is it that you're offering for that company? How does it work?
You're getting it on a subscription. Companies are coming and saying, Industrious got it ready to go for me, and I'm going to subscribe on a rolling basis to have my Tampa or my New York offices be in an Industrious, and I'm going to get an amazing experience when I do that.
And Brendan, you did all the work with CBRE on this. First, I want to let you make an announcement, which is exclusive to CNBC. But also, I want to understand, what does this say about CBRE in reorganizing itself to get into flex office?
Yeah, so at Fifth Wall, we were obviously incredibly proud and excited to be investors in Industrious, and now we're announcing Fifth Wall Securities, which represented Industrious, on its sale to CBRE. And I think what this shows is that CBRE has really lapped its peer set when it comes to innovation. Like, they have truly leaned into the space in a way that their peers just have taken a very back-footed approach. And I think this acquisition is part and parcel of that. But you mentioned, why is Industrious, or why did Industrious succeed where WeWork failed? And I think it comes down to 2 things. They both relate to business model. The first is it's a David and Goliath story. I mean, CBRE basically acquired Industrious for $800 million. You know how much money WeWork raised? They raised $13 billion. Wow. At their peak, they were a $47 billion business, and they went bankrupt. And the reason Jamie and Industrious succeeded, and what CBRE saw, was a better business model because of short-term engagement and leasing. Yeah. CBRE is just, I think, leaning into that, and that's supporting the whole flex mandate here.
So let me zoom out for a second. I thought we were all back to the office. I mean, we're all sitting here in person. Amazon's back to 5 days a week. Maybe the government's going in that direction. I know there's pockets where we're not quite there yet. Where are we, though? Because this all sounds like it's representing a future of work that still is more flex, sounding a little bit more hybrid than it was in the past.
I think there's 2 places we are right now. One is more distributed. Part of the reason there's a lot of demand for flex office is there are just more companies in the U.S. and globally that have 60 people in Denver now and 41 people in Los Angeles, and instead of making the whole company move to Chicago. That obviously helps flex. And then you're getting a more diverse sort of cultural orientation at different. It's like picking a college, Some colleges are party schools, some colleges are a little nerdy. I think you're going to have in-office companies, and you're going to have companies that are very remote and everything in between. And then people, when they decide where they want to work, that question of what's the office environment like and is it going to be part of my life is going to be part of their decision set when they decide where they want to take their career.
And from a financial point of view, then, for the vacant office space, what feels, I mean, I know a lot of this is just going to get dinosaured and mothballed, unfortunately, and it just hasn't kept up. But so it sounds like there's still going to be a use for these buildings, but maybe it's just going to look different than it did.
It's going to change. I mean, people have predicted the death of different real estate asset classes since we've been around. There's the death of retail, which was like 8 years ago. Right. And it turns out that was wrong. And now everyone is predicting the death of office. And the reality is, no, it just changed. And the dynamics are different. There was this false positive moment during COVID. But the reality is, this interview would be worse if we were remote. The reality of in-person is powerful.
So what's the next big deal? You're now saying that you're in the space, you're investing, you're now facilitating deals, not just being the VC fund that you were. What's the next big deal?
So we're going to continue to be a venture fund and invest in companies, but our thesis is that the largest real estate companies on earth, that many of which are LPs, are going to start to engage with and acquire these new innovative tech solutions. Companies like Industrious. And I think exactly what CBRE did, where they made a strategic investment starting in 2021 in Industrious and then eventually acquired Industrious, you're going to see that over and over. So this collision between technology and real estate is only going to accelerate.
We're almost out of time, Jamie. I just wanted to ask, I don't know if you're active in the D.C. area, but what is the ripple effect of this return? I don't think federal, organizations are using sort of outsourcing to companies like yours. Maybe they are.
So a couple years ago, the federal government said, hey, we want to put out an RFP and start using more flex. And we were all wondering, interesting. Now it's much clearer. I think the government is actually going to increase their use of flexible office so they don't get caught in 10-year deals where they might want to contract out of it.
Is that cheaper in the long run, I guess, for taxpayers?
I believe so, yeah.
And is that helpful if you have DOGE, which may be pulling back on actual employee count?
I think the government is going to have to work its way through this entire strategy, and at the other end of it, they are probably going to try to be much more rational in the way they approach.
It's fascinating.
Their occupancy.
Guys, thanks for coming. Congratulations and all of that. Thank you for coming here to talk about it. And I just really had no idea, so it's a good glimpse into this whole space. Jamie Hodari with Industrious, Brendan Wallace, Fifth Wall, and Diana, of course, thank you as well.